How close are we to recession?
We're closer than we were, say, the middle of this year. We're not in a recession. And that's not just the Sahm rule. Look around, the economy is still growing. Now, that's no guarantee that we will be in that place, in the coming months. And yet we are not in a danger zone with the labor market. And there's a lot of reasons why we may have seen the unemployment rate come up that could be good reasons, like workers coming back.
What's important here, and you have it in your research note to us, and Bramo, I think, has really been out front on this, is almost the behavioral impact, think Thaler at Chicago, the behavioral impact of feedback loops. Tell us about what you're working on, I'm selling this, folks, for Claudia. She needs something to do. The new acclaimed Sahm feedback loop. What's it look like?
Well, this is the logic. The Sahm rule is about the unemployment rate rising a relatively small amount. That happens early in recessions. It's been very accurate. The idea behind it comes well before me in that once the unemployment rate starts rising, it keeps going. Because on the demand side, there's this feedback loop. Some people lose their jobs, then they buy less, then those workers lose their jobs, and so on and so forth. And that's where it really gets going. What we see right now is not just the demand side, which would be a typical path into a recession. We see this, workers have really come back. We've gone from labor shortages to now some workers that are looking for jobs, right? It's going to take the jobs longer to catch up. That's a good thing. We needed those workers. It's just, as with everything else in this economy, it's been messy to line up supply and demand. So now it's in the labor market.
How uncomfortable does it make you to say this time is different?
Very uncomfortable. And yet, we could have said many times since the pandemic, this time is different, and very legitimately. I talk about the quote-unquote Sahm rule breaking, which is it would trigger, and then we would not go into a recession. Last year, we saw 2 quarters of declines in GDP growth that has only happened inside of recession since World War II. It happened, and we were not in a recession. So the Sahm rule could be next in line to break, and I prefer it didn't. I prefer unemployment stay low. But if it did, my base case is we don't go in a recession.
Does this mean that right now you see sort of the immaculate disinflation, or you see just year over year inflation come down to the Fed's target by later next year without necessarily the Fed doing anything more and even potentially cutting rates like so many Wall Street firms seem to believe?
I take issue with the idea or the term of immaculate disinflation. This is coming out of a pandemic. We know where this is coming from. It's not just like it appeared. And yet, to your point, we've already seen it. Right. And there are not all the disruptions worked out in the economy. The labor market's a place where we've seen some of the kind of last momentum. There is more to give in terms of inflation coming down. It's going to be messy. I expect tomorrow not to be a fun day in core inflation. And there is some of the demand to come out. And we've seen that wage growth has slowed back to something more normal. So everything is rowing in the right direction on inflation. It's just going to be slow and bumpy.